Welcome back. You're watching Editors Roundtable. We have a guest joining us now. Rahul Arora is with us. Rahul, good to have you in our studios. First question, what did you make of this big Bank Nifty rally today after the policy?
So thanks for having me, Anuj. I think it was a market neutral policy. I think the good part was that he was not as hawkish as people were expecting. And I think if you look at the 10-year yield spread between the US and India, it's down to about 3.5%. Historical averages are about 5%. So I don't think there's too much by way of a bond market rally on the 10-year expected as well. So I think from a mark-to-market perspective as well, I think banks are in a better place. I think from now on, I think you probably see deposit rates inch up a little bit. I think all in all, obviously, Anuj, the other important factor is that you've seen a shift away from IT. So from a large cap to a large cap, I think there's been, and today was the last day of the quarter where you would have seen some NAV adjustments as well. So you would have had some portfolio flows flowing just because of a technical adjustment into the banks. But I think overall, it was a market neutral policy, and the fact that I don't think the fixed income traders or the bond market experts are expecting too much of a rally in the bond yields from here. From a mark-to-market perspective, I think it's all right. So valuations are still very comfortable, Anuj. I think it's been a sector that's over a period of time underperformed. Obviously, off late, the ICICI and the SBIs have been doing well, but if on an aggregate basis, there's been a sense of under ownership and underperformance. So kudos to it, and I hope it sustains.
And a lot of right things have happened, right? I mean, credit growth is picking up, asset quality is stabilizing. But Nimesh was making this point earlier about how now there's some fear in the market, and it's the best time to buy when the market is fearful, perhaps. How are you reading into it? Do you think one should just perhaps take a step back, keep your powder dry, or is this a time to go all in?
So there are two ways to look at it, Sonia. There's an optimistic way and there's a pessimistic way. Optimistic is if you see the last 2 years of COVID, corporate India's balance sheets are as healthy as they've ever been. Debts are at the lowest level, cash flows are at the highest. Capacity utilization is at 73%, and corporates are investing left, right, and center. So if you have a situation where capacity utilization inches up to 80%, you're probably getting into a situation where profit growth is going to be extremely handsome. So if you look at the market from that perspective, you'll buy every dip. The concurrent side to it is that the US has gone just completely out of whack with interest rates, and you don't know how severe the recession is going to be or the slowdown is going to be next year. And the IT stocks and the IT index is giving us an indication to that effect. If indeed it pans out such, I think the pain could be slightly more protracted. So you may have a situation where earnings growth may still come through, but you may not be backed by the kind of liquidity to buy the stocks that you've had over the last 2 years. So you may still end up being in a net neutral year where the Nifty probably moves in a 15, 16 to 18, 19 kind of range, but doesn't break out in a material way on either side. So I think just before we went on, we were discussing 4-5 months back, the Nifty did fall from 18 to 15. And the ferocity with which it bounced back, I think because this entire sort of notion of liquidity is so large, and everyone who's missed out will probably want to buy every fall, which is why you're finding that even though you're having these dips, they're not sustaining for even a period of 15 days. So, by all means, if you've missed out, go in and buy. I think from a corporate India standpoint, I'm optimistic. Just from a liquidity standpoint, I'm a bit worried. But if you're getting the quality stocks at your price, why not?
But Rahul, what about on the Nifty itself? The mother market has broken that June lows that we saw. We are still a good 10% away from here. You think that level will hold up? The June lows, 15,100 odd?
There is no incremental evidence, Nigel, to suggest that it shouldn't, right? Because the last time we were there, crude was at 125, 130. Yeah. Today you're at about 85, and the CAD number that came in overnight, if you look at our estimates and the market estimates, they were between 3.2 to 3.5%. So optically, a 2.8% looks bad, but it's still far better than what the street was expecting. My sense is that after hearing the RBI governor today, I think they'll balance the rupee where it is. So I think from an economic standpoint, I don't think things are too bad. In fact, we're sitting far better today than we are. Than we were 4-5 months back. The only thing, like I was saying to Sonia as well, is how does liquidity pan out from here, from the central bank angle and from the FPI angle? That is the big variable that none of us can predict. But like I said, because you've had such a sharp run from 7,500 to 18,500, every dip, that fear of losing out could potentially cap the downside. So it's a very good chance that level holds out.
Rahul, you talked to a lot of your clients as well, both FIs and DIs. What are they doing? For the first time in this calendar year, India is trying to do a catch-up with the global underperformance. We've been a rank outperformer for the last many quarters now. Now, after a 10% fall in Bank Nifty, a 6% fall in the Nifty, what are clients telling you? Are they willing to put in money, or they are like, just hold on, sit back, just look at what happens in the global market?
So, Nimesh, I think when I talk to mutual funds, I think the average cash level is between 3 to 5%. If I talk to insurance companies in India, average cash levels would be between 8 to 10%. Now, I think the one material thing that has changed over the last 5 years is demonetization. Because the size of the mutual fund industry back in 2016 used to be 5 lakh crores. Right. Today, it's 8x that at 40 lakh crores. And equity within that would be about 18, 20 lakh crores. So, the buffer you have from the DIIs itself to push the market up is at record high levels.
That's what is helping Indian market.
Absolutely. Right? So, to that extent, there is a bit of a decoupling that you've seen from a liquidity standpoint, because Indian capital markets have never had this level of domestic liquidity to counterbalance the FIIs. I think if you spoke to somebody 4 or 5 months back and said you'd see the kind of FII buying that you saw in the last 45, 50 days, I don't think we were anticipating that. So to that extent, I think it's good that both are sort of moving in tandem. But my sense is that as you get closer to the end of the calendar year, when the FIIs rebalance for the year, we do that typically in March, you may see a little bit of FII withdrawal. But I think we should be in a position domestically to absorb that. I mean, deals are going through, you yourself are reporting them with such ease at every level. Blocks are getting, subscribed and issues are getting subscribed. So it's still telling you there's a reasonable appetite out there. So I think there is a very healthy cushion, the likes of which we've not seen, say, in Lehman or 2013 taper tantrum or other instances in the past. This time, the counterbalancing force is just too strong.
Okay, well, forget about all that. It's the weekend, guys. So what are you all planning to do? I mean, there's so much to do this weekend.
We've planned for this weekend.
You don't want to share? There are some new movies releasing. Vikram Vedha is releasing as well. I mean, that looks pretty interesting.
I don't think
I want to reveal, but Sonia, Rahul is kidding us. So we called him here only for that, so that we can go with that.
Only for that.
Thanks for leading us out, by the way.
But I think the multiplex industry might be in for some good times. I think there is, you mentioned Vikram Vedha. There is Ayushmann Khurrana's movie Dr. G coming out, and there's
a South Indian movie which apparently is very good.
That one too. I think that's the Aishwarya one, if I'm not mistaken. Yes. And then you have one with Ranveer Singh and Alia Bhatt. So I think the October to December.
Love for QSR, for exhibition businesses and all. So
so I think it should be.
So many other big names latched onto Aishwarya Rai.
Sorry. Well, Alia Bhatt. Yes, I did mention there's a Ranveer Singh and Alia Bhatt movie coming through as well.
Almost all equity market observers or commentators, right, are big Bollywood fans. That's one thing I've realized. So
content fans, that's it.
Content fans, okay. Well, with that, it's a wrap on this edition of Editors Roundtable. Thanks so much for watching. We'll be back again bright and early on Monday.